And as we head into 2026, the global trading system is encountering challenges to both stability and growth. One changing current is the decrease in US inbound volumes. Another is a strong increase in imports into India, West Asia, Africa and Latin America. We decode that and more in this next report. Take a look.
The global trading system enters a new era fraught with greater threats to its growth and security. Under Trump 2.0, as seen this year, still international trade in goods continued to do reasonably well. That is despite President Trump's efforts to create a tariff wall around the world's biggest economy. October saw a 2.1% increase in global container volumes compared to the previous year. Yet, beneath the overall resilience are shifting undercurrents. The US saw an 8% contraction in inbound volumes. On the other hand, imports into Africa, West Asia, Latin America and India showed robust growth. In 2026, experts predict more trade uncertainty from possible shocks to global supply chains. The US review of trade deals has the potential to disrupt and reshape global commerce even further. In 2026, the US Supreme Court will decide on the validity of Trump's reciprocal tariffs. That decision is likely to lead to adjustments in the administration's tariff powers and chaotic refunds for American importers. Betting markets have given a 75% chance of a Trump loss. Shipping industry veteran John McCown, in a LinkedIn post, said that Trump's trade threats were among the key reasons for the rewiring of shipments this year. He added, if 2025 was the year of the tariff, then 2026 will be the year of tariff consequences. Broadly, analysts bet on supply chain disruptions similar to those experienced during the COVID-19 pandemic. However, one positive expectation is the return of the world's cargo fleet to using the Red Sea. This change would potentially save big costs from the current longer route around southern Africa. On trade itself, high on the White House's list of 2025 accomplishments are deals with several major economies. Most of those deals were bent to Trump's demands, ranging from investment pledges to better market access for US exports. What was clear was the brashness in the approach. If countries agreed to those terms, their goods were smacked with a tariff rate that was lower than the duty on those who retaliated. But the real problem is that these deals are not traditional, binding agreements. Enforcement provisions and fine print spelling out the rules are not clear. There's only a one-year truce with China rather than a full agreement. So a full-blown escalation in a renewed trade war cannot be written off. That is especially true given the potential for pressure from Beijing against any nation open to working with Washington at China's expense. Malaysia and Cambodia experienced that with the trade deals signed with Washington. China warned both nations against measures that undermine Beijing's interest. 2026 will not just be about the macro themes, but will go well beyond the traditional equations, politically and economically. Business Bureau WION, World is One.